In previous sections of this chapter, we have learned how to journalize the taxes and the payroll for a business. So far with the taxes, we've just put them into a tax payable category, which is a liability, meaning we haven't really paid them yet to the government. There are three things that we need to focus on this chapter. The first one is when employees pay their taxes, they're going to pay their ones that are in payroll first, which are the federal income tax, the Social Security tax, the Medicare tax. They need to be submitted using a federal deposit coupon by the 15th of the following month. So that is why when we journalize those three types of taxes, the date is going to be the 15th of the following month. For the unemployment taxes, they need to be submitted by the end of the following month, and that is going to be using the same type of form. The only difference is what's bubbled in, and you don't really have to worry about that because we're not going to be filling out any of those forms. The point is, though, in this chapter, we're actually going to be paying the taxes. An owner of a business or a boss would submit these types of forms to actually go forward and pay those taxes. Right now, we're going to just journalize them as if they've been paid. When you pay your taxes, it's going to come out of your cash. It's going to come out of your cash, and also your tax payable, where you've been storing your taxes, is going to decrease now because you're actually going to be paying those off. Your liabilities are going to decrease. We're going to first journalize the payment of the federal income tax, the Social Security tax, and the Medicare tax. And the way in which we're going to do that is we're going to debit those three accounts. Since they're liabilities, they will decrease on the debit side. So if we're paying them off, it makes sense that they would decrease. And we're going to credit our cash because we're paying cash. Cash is going to decrease, and cash decreases on the credit side. Then notice it's dated the 15th of the month. Halfway through, those three are due. Then we are going to journalize the unemployment tax to the federal and the unemployment tax to the state. Same concept, that they're written and they're paid out of cash. So cash is going to be credited for both. And also, they're going to actually be journalized separately because they're going to two different places. One is going to the federal government, the other one's going to the state. They are going to also be debited for the amount that you owe for that given pay period because they are a liability and they decrease on the debit side. We're going to be on page 259 in the textbook. We're going to do the work together problem, and that corresponds to page 313 in the journal. It's a cash payments journal because we're paying with checks, and checks affect our cash account, and we're paying. So the payments journal is what we use rather than the received. If we look at the directions, it says, a cash payments journal is given in the working papers. The following payroll data is for digital supplies for their monthly pay period ended March 31st of the current year. The date paid is March 31st. Now, when these taxes are due is the following month, so the federal income tax, Social Security, and Medicare are due by the 15th of the following month, which would be April 15th, and the unemployment taxes are due at the end of the next month, which would be the end of April, which is why you're going to see the dates in here that correspond to that, or maybe we're not. In the application problem, they correspond to that, so we're going to just have to recognize this when we date this. This is the date paid, federal income tax withheld, employee Social Security tax withheld, Medicare tax withheld. So previously these would have been journalized into income tax payable, federal income tax payable, Social Security tax payable, and Medicare tax payable. We're going to prepare a journal, and it tells us up here that the credit balances on March 31st for the unemployment tax accounts for the first quarter are as follows. Unemployment tax payable to federal is this. We don't actually have to calculate it, but remember that that is found by finding 0.8% of the total income, which isn't on here. And the unemployment tax payable to the state is $680.40, which is found by finding, I believe, 5.4% of the total income. They they have to pay both unemployment taxes each quarter regardless of the amount owed. Prepare a journal entry for the payment of withheld taxes. Digital Supplies is classified as a monthly schedule depositor. Date cash payments journal, page 14, on the day taxes are due to the federal government. Check number 383. So you have to recognize when they're due. And that's not unemployment yet. That's just the payroll taxes. So it's going to be dated the date that they're due. So unemployment, federal income, and Medicare are all due on the 15th of the following month. That's going to be April 15th. It says to use page 14 of the journal. This is a cash payments journal. And we need to pay the 3 types of taxes. So remember that the first federal income tax is called employee, I think it's called employee, let me just double check on that. Yeah, employee income tax payable. That's where the money is currently stored. We need to take it out of there, so we're going to debit it for the amount that it is, which it says in the book that it's $1,386. It said, and then we also, this is check number 383 for all 3 of these taxes. They get filed together or paid together because they're all going to the same place. We also need to do the Social Security tax payable. Still on that same check for the amount of $819. We also need to do the Medicare tax payable. On that same check for $189. Remember, liabilities decrease, increase, decrease on the debit side, which is why those are being debited. Our liabilities are going down. Also, cash needs to be credited. Cash needs to be credited for the total. So we need to calculate what the total of all 3 taxes were. And we get $2,397. Nope, that's not right because I put a 9 there. Check this out again. $2,394. That is how we would journalize the payment of those 3 payroll taxes. We also need to journalize the payment of the two unemployment taxes. The unemployment taxes need to be paid by the end of the following month. April has 30 days in it, so this would have to be on April 30th. We're going to pay the unemployment tax payable to the federal and the unemployment tax payable to the state. We'll do federal first. They need to be paid separately, so this has its own check. In the book it says that the check number is 401, and it says that the amount for federal is $100.80. And cash is going to have to be credited for that same amount. On the same day, I guess we didn't have to write April again. On the same day, we need to pay our unemployment to the state. It needs to say these accounts because these are actual accounts that the business has that's found in the chart of accounts. Check number 402 for the amount of $732.24. Credit cash for the same amount. That is how you journalize that you paid those taxes. The reminder, the way in which you actually pay those taxes, if you were to run a business, would be by filling out this type of form, this Form 8109. Two separate forms need to be filled out, one for the unemployment and one for the other three, the ones that are taken out of payroll. The bubbled in is what makes the difference in what it's for. You are now going to work on the application problem 14.4. You need to calculate your total earnings. Please make sure that you follow the directions in the checklist to complete this because it might be confusing if you don't. Good luck!